Alright, so we've already talked about support and resistance trend lines. Now we're going to talk about support and resistance levels. So support levels. Let's imagine a situation where we have a downward trend in the market. And in this case, a support level is a horizontal line, which is called support level, which represents a barrier for the price. So when we'll find out how to look for support levels in a few minutes, but right now let's see what a support level does to the price. So as the price approaches a support level, traders become hesitant because they don't know what will happen. They don't know whether the price will cross it or whether the price will bounce off and move in the opposite direction. So generally you'll notice a kind of consolidation on the market, and then one of the following three things will happen. Either the price will bounce off the support level and go in the opposite direction, or the price might test the support level a little bit, cross it, and then bounce off and go in the opposite direction. Or the price can actually cross the support level and there'll be a massive impulse in the direction of the trend. So now resistance levels. They're very similar, but they're the opposite. They're above the price. So resistance level puts pressure on the price and doesn't and acts as a barrier for the price going upwards. And once again, generally speaking, there's three possible outcomes. Either the price bounces off the resistance level and goes down, or it can test the resistance level and then go down, or it can cross the resistance level and there'll be a strong impulse in the direction of the trend. There are two main types of support and resistance levels, and these are historical and psychological. Let's have a look at the historical type first. So historical levels. Looking at this chart, can you identify any horizontal lines that have been tried and tested by the price more than one time? We can see one of those lines right away. It's this horizontal support line, and the price tested this line over here at first, and then it came back to this line here. And so what can we anticipate from the price's future movement? Well, we can anticipate that if the price does go towards this support line, then something will probably happen over there. So, and that's how you establish support and resistance levels, the historical type. You look at what happened in the past and you see that, oh, wait a second, so the price was hesitant to cross this level previously, or there was some sort of consolidation there in the past. So maybe that same thing or something might happen when the price approaches this level. And more often than not, that's exactly what will happen. There will be some sort of abnormal movement when the price gets to this level, and that's what we take advantage of. The second type is psychological levels. So they're a bit different in the sense that the price is just in a trend, and then we identify a level which is very often a round number. So, for example, 1.5000. That is a number that plays with the minds of traders, and because they don't know whether the price is going to bounce off it or cross it. Mathematically speaking, there's nothing special about 1.500. It's no different to 1.650. But at the same time, in a consumer's head, in a normal person's head who walks the streets and lives his life, in his head, his home currency being traded at above 1.5 and below 1.5 are two distinct things. So you might not care whether it's 1.6 or 1.7, but he'll remember if it's 1.55 or if it's 1.45, because that kind of difference sits in your head. Or same thing if it's like 2.0. Like you would know if your home currency or somebody's home currency is trading at $2 per unit of their currency or below or above. So it's kind of a strong level because it's a round number, and traders tend to be hesitant when the price approaches this level because they don't know what will happen, whether the price will go down or up. And same thing as with historical levels, something happens. One of the three things that we discussed normally happens over here. So let's have a look at an example from a real chart. Here I've got the British pound dollar weekly chart, and I just took this out of my terminal, so this is fresh as of today, 4th of February 2015. And as you can see, the British pound dollar currency pair is approaching, or has approached, this blue support line, and guess what it is? It's 1.5000. And let's have a look here closer. So as we discussed, traders don't know what's going to happen, and these kind of round numbers play with their heads. They're anticipating some sort of reaction or action on the market, and generally the price goes into consolidation for a certain period of time. So traders don't know what's going to happen, and here you can see that's exactly what happened. So before the price reached this level, we had 6 weeks in a row we had bearish candles. You see those 6 white candles going down? There were 6 candles in a row, and as soon as the price got to the psychological level, it stopped. We got 2 bullish candles. So the price went in the opposite direction, and that's because it's testing the level. It doesn't know, nobody knows whether it's going to cross it or whether it's going to bounce off. And so now there's like a balance of power of bears and bulls, and sooner or later one of those 3 things will happen, and we'll see a strong movement afterwards. And in this particular case, you can see that the psychological level is also a historical level. And that's quite common with psychological levels, because they tend to be very significant throughout history. So back in January to July 2013, the price tested this psychological level 3 times. And as you can see, it was unable to cross it, and that's when a massive impulse happened and the price went upwards and reached somewhere around 1.7 American dollars per British pound. So now it's back here at 1.5000, and everybody's waiting to see what will happen. So to sum up, there are 2 main types of support and resistance lines. These are trend lines, which are diagonal, and these are levels, which are horizontal. And there are 2 types of support and resistance levels: historical levels and psychological levels. And all of them act as barriers for the price. And when the price gets to them, it either bounces off, or we see an impulse when the price crosses these levels.